Unser nächster Gast, our next speaker, is a member of the League of Powerful Women. Her name is Ms. Noripah Kamso. Mrs. Kamso is Chief Executive of Principal Islamic Asset Management of CIMB, which is one of those acronyms where you can't even find in Google what it stands for. It's just like SAP. You know that there is an SAP, but you have no idea what it stands for. But I do know that the company is headquartered in Malaysia, to be correct, in Kuala Lumpur, the capital of Malaysia. Mrs. Kamso was a two-time winner of the Marketing Personality of the Year and CEO of the Year of Malaysia in 2007. She's also a great believer in Islamic investing, and that's one of her strong beliefs because it is resilient whether in bear or in bull markets. And now is the time for Mrs. Kamso to please come up to the podium and give you a presentation.
Guten Tag. And haben Sie gut gegessen? Ich schon. Well, this is my first time in Vienna, and thank you very much for this very kind invite. It's a beautiful and a lovely city. I just love it. I wish I could have stayed longer, but there could be opportunity for me to actually come again. Thank you very much for this invite. Very kind people, very polite, beautiful and warm despite the weather. I also Googled the internet just 2 days ago to get as much information on Austria. And I would like to congratulate the Austrians because I was really impressed. Having had this backdrop of what's happening in the Eurozone as an outcome of the sovereign debt crisis, I could see that Austria is number 19 in the global competitive report. You actually beat the like of China, Spain, and you even beat Italy. Italy is number 43 in the global competitive report. Congratulations. Mr. Kafsi mentioned earlier that Islamic finance, the word Islamic itself, can be construed as very much a woman wrapped up, wearing a black abaya, only the eyes can be seen. And as you can see, that is a pure image risk. You can see that I am dressed like any one of you, and you can actually see that I'm a practicing Muslim, but we are as professional and as modern as any European. So please feel comfortable using the word Islamic. Alternatively, I will also use the word Sharia. Sharia compliant is another word that is probably a lot more friendly than using the word Islamic, because effectively Islamic, although it's related to religion, as Mr. Kafsi mentioned, it is actually an ethical finance using a faith-driven principle and system. It just reflects on the spiritual ethos of things. So, ladies and gentlemen, meine Damen und Herren, the topics in
press this one?
Yep.
Well,
So
maybe it
this
needs
doesn't
another
work?
one. Oh, this way.
Danke.
Goes the other way.
The topic on investment banking and capital market is a very broad topic. The capital market covers sukuk and securitization. It covers equities. It covers Islamic derivatives. It covers investment banks. It covers asset managers. It even covers insurance company. In Islamic, we call it takafuls. So I fear if I cover all of these activities, I probably will take the whole day. As such, I will focus my agenda to cover 3 areas. Number 1, I'm covering the Islamic investment banking and the case for Malaysia's comprehensive financial system, the Islamic financial system in Malaysia. Number 2, I will spend more time in what I am familiar with. It's basically Islamic asset management. It's mitigating the myth and misconception. I will share with you global Islamic investment management industry. And number 3 is to share with you why you should invest in Sharia or in Islamic. I will be sharing empirical evidence with research from a portfolio manager's standpoint. But I shall not cover the case of Islamic securitization because sukuk will be covered by the next speaker, Mr. Rizwan. With more than $2 trillion of credit demand projected to be unmet in the next 3 years as the conventional securitization market becomes dysfunctional, the current market situation provides a window of opportunity for sukuk issuance in Austria. So that will be covered by the next speaker. Mijn Damen und Herren, what happens in the world today is because of greed. If in the conventional space there's opaqueness, in the Islamic space there's transparency. If in the conventional space there's capitalism, in the Islamic space there's fair distribution of wealth. If there's greed in the conventional space, there is profit and loss sharing in the Islamic space. If there is uncertainty and ambiguity, there is certainty in contracts and structured process in the Islamic space. If there is free market and capitalism in conventional, there is fair market in Islamic. And if there is smoke in the mirror, toxic assets and derivatives, in Islamic, they are underlying assets in most of the transactions. So even Mahatma Gandhi practices Islamic finance. There is enough in this world for everybody's need, but really there's not enough for everybody's greed. And Islamic jurisprudence focuses on equitable distribution of wealth for everybody's need. This is the opposite of pure capitalism. Now, this is the historical value chain of Islamic finance in the investment banking space. The first baby was born in Egypt in 1963, and that baby has actually not grown as fast as we expected. And the aspiration to promote Islamic finance came as early as 1975 when the Islamic Development Bank was formed, and this is just like the World Bank. And then it was followed by more regulatory standards. You have Iran in 1983, and you have the formation of AWO-Forum in 1991. So as you go across the value chain, you would be able to see the growth and the internationalization of the sukuk as early as year 2000. But now, as we go forward, there is faster traction across even the non-Muslim countries. In this next visual is the visual of the blue, which is the conventional market, and the green, which is the Islamic market. If you look at the blue, how is it governed? It's governed by the World Bank, by BIS, by IMF, by ISCO, IOFC, IASB, and IASB. Who governs the Islamic space, which is the green space? Now, that is governed by AAOIFI, that's IOFI, which is Accounting and Auditing Organization of Islamic Finance Institution based in Bahrain. It's governed by IFSB, the International Financial Standard Board, IIFM, the International Islamic Financial Market, and IDB, Islamic Development Bank. So the space basically is there, and they are basically governing the Islamic banks, insurance or takaful operatives, the Islamic equities, the sukuk, the Islamic REITs, and the Sharia-based unit trust. The IFSB, or Islamic Financial Standard Board, issued guiding principles of risk management for Islamic institutions since December 2005 in capital adequacy ratio, in governance, in supervisory, and standards principle. Today, if you look at the green side on your right-hand side here still, it is standard practice for Islamic financial institutions to maintain a Sharia supervisory board that provides an oversight of the institution dealings in Sharia matters, transactions, decision-making. An example of such oversight exists in Malaysia, in Bahrain, in Pakistan, in Kuwait, in Jordan, Lebanon, Indonesia, and many others. The industry moving to Sharia standards, example the AAOFI standards as of 2008, it has got 23 accounting standards, 5 auditing standards, 6 governance standards, 2 code of ethics, and 30 Sharia standards. And there's faster traction across the value chain after 2007. Sharia dispute resolution in the Malaysian Islamic capital market are also in existence. The stability of Islamic banking and finance is based on 100% reserve banking. There is no credit creation out of the thin air. Deposits have to be reinvested directly by the bank in trade and production activities and create new flows of goods and services. The current financial crisis has exposed all major financial institutions as well as the financial market to liquidity risk. It was mentioned in the opening speech, although it was in German, I noticed. He mentioned liquidity risk. And liquidity risk is higher in Islamic financial markets due to the lack of liquidity. To enhance the Islamic products. So recognizing the need to develop products to establish a vibrant intra-bank market and to cater for different maturity of the structures, the central banks around the world has established an organization called the International Islamic Liquidity Management, and the headquarters is in Kuala Lumpur. So talking about Kuala Lumpur, I would actually want to take you to Kuala Lumpur in Malaysia. This is a case for Malaysia. It's a comprehensive Islamic financial system. The Islamic financial system, this is building up an Islamic capital market, the Malaysian example, the Malaysian way. Malaysia perhaps has the best example today of a comprehensive capital market in Sharia-based services and products. These coexist in parallel in the conventional as a choice. So Malaysia is useful is a useful case study of how the government and regulatory policy initiative can complement commercial and community interest in the private sector to create a high growth and thriving market environment. It is founded on community beliefs in the need for availability of investments that are not contrary to the teachings of Islam. A coordinated approach to policy, regulations, and participation are in existence. So if you refer to this visual, you would be able to see that there are 17 Islamic banks, there are 10 Islamic windows, there are 4 international Islamic banks, and for takaful, there are 8 takaful operations, and there are 4 retakafuls, and there are 1 international takaful operators. But the most encouraged out of this whole capital market situation is the growing niche in asset management. They called it the fund management on your right-hand side at the bottom. There are 16 Islamic fund managers headquartered in Malaysia. You can name it, the like of Templeton, BNP Paribas, Amundi. In my case, it's CIMB Principal Islamic. It's 50% owned by Principal Global Investors of United States, based in Des Moines, Iowa, and Principal Global Investors has an asset under management of $232 billion US. So it's an American-run outfit headquartered in Malaysia. So if Mr. Kafsi mentioned earlier, 911, image on terrorist, there's concern on the word Islamic, I suppose at the end of the day, if there is an opportunity to make money, even the Americans enter into an asset management business focusing purely on Islamic asset management. Where I come from on a daily basis, I manage Islamic asset management, offering to institutional clients, the like of central bank, the like of pension houses, insurance, takaful operators, foundations, sovereign wealth funds. And it's a global capability that we are offering because Islamic is a global phenomenon. I met participants in the audience today. They're also from the insurance company. And it's worth sharing just a little bit on Islamic insurance. We call it takaful. Its business framework is based on graduates' contribution. These contributors or this community place the money into a contribution pool of funds, and the contributors effectively own this pool of funds, and they also own the policy. On who manage this contribution pool? The takaful company manage this contribution pool. So the takaful company is more of an operator when graduates like you all have got a claim to do on the takaful. You don't call it a claim, you actually get a gift from the pool of takaful. Ladies and gentlemen, there are many misconceptions in Islamic finance. And the most frequently asked question is whether Islamic derivative present and future is allowed. That has been in your mind ever since I talked to some of you all this morning. So whether it is forward and future options or swaps or profit rate swaps or total return swaps or foreign exchange options or cross-currency transactions, all these are allowed under the wa'ad or the salam concept, as long, I repeat, as long as speculation and uncertainty, the existence of ownership and possession are resolved. So the arguments in favor of Islamic derivatives are compelling, and they are supported both by inherent Sharia principles as well as overall public interest and necessity. So while most structures to date has been relatively vanilla, the total return swap based on the wa'ad structure, which is actually the short selling structure based on ulbund, as an example, under Sharia capital platform, there's one established in 2008. And Salam, as an example, is a derivative under New Age, the previous SocGen platform in 2005. All these have actually shown impressive ingenuity by practitioners and scholars in this field. So going forward, one would assume that the industry will make more use of Urbun and Salam structures, which Mr. Kasi has actually shown, the Salam structures, and the composite and intrinsic Islamic nominate forms that constitute the basis of an Islamic swap. We just need to remember that money is not a commodity, but money is a medium of exchange and also is a potential capital. Now, let me take you to Agenda 2. I mentioned earlier, Agenda 2 focuses on Islamic asset management, mitigating the myths and misconceptions, and I will share with you Global Islamic Investment Management Industry Update. The truth is here. First, let me explain what is the difference between a conventional investing and a Sharia investing. Don't look at the board, don't look at the screen. A conventional portfolio, a conventional investing will have a universe of stocks that are all the stocks in the constituency of a global equity. Whereas in a Sharia investing, only permissible stocks can be in the portfolio. Permissible stocks will exclude stocks that are non-permissible from the doctrine mentioned in the Quran and the Sunnah. So the non-permissible are the ones which are uncertain, which is gambling, the like of usury or interest from conventional banks are not there. So conventional banks are out, gambling are out, pork are out, pornography are out. Most of the non-ethical are out in the conventional screening, in the Sharia screening of investing in a Sharia portfolio. And on top of that, if we compare again to the conventional, there is just no screening at the benchmark level in the conventional. There is effectively no quantitative risk overlay at the portfolio level, at the benchmark level. But if you look at the Sharia portfolio, there is screening, and that screening of the second level will take out companies that is highly leveraged, take out companies that's high receivables, and take out companies that has got unproductive cash. So what is left is, yes, a smaller constituent, but it's a constituent of very, very stable stocks. And common sense will prevail that if there is a recovery in the market based on fundamental, the stable stock, this less volatile stock will remain resilient. The third difference in a conventional investment portfolio, it's a mixture of ethical and unethical stocks. But in a Sharia portfolio, if there is any stocks that is tinted or non-permissible, we will have to go through a purification process. We will have to cleanse it and donate the excess profit to charity. So with that difference, I will take you to this slide. This visual is basically mitigating all the myths. I'm sharing you the truth that the products are available to both Muslims and non-Muslims. That the products are just not complicated. The only difference is the screening process. If it's equity, and if it's sukuk, you share risk and profit. The universe is actually not small. If we just look at Dow Jones Islamic World Index, there's 2,400 stocks in the Islamic Dow Jones Islamic Market Index, World Index, and how large is the market capitalization? It's 13 trillion market capitalization. And if there is a myth that says that there is a performance drag, it's not performing, the Sharia-compliant portfolio, it is untrue because it grants comparable risk return. It's very, very stable. The stock universe are screened, and they're proven to be resilient, as I prove to you later. And the course is actually the same. It's based also on 5 basic principles. They are not inferior to the performance of the conventional. There's this myth that says there's a lot of restrictions, but investment sense, a good investment sense, came out of these whole restrictions because the portfolio becomes very, very stable, less volatile, and very resilient. So in a downtrending market, it grants an outperformance highly likely to the conventional. And if you think there is very little of such product, there's actually a huge breadth of products. There's 800 products globally that covers across the whole asset classes. Players are in Canada, players are in Australia, in South Africa, in Switzerland, they're everywhere around the world providing as many Islamic asset classes as possible. And if there's a myth that say derivatives, hedging is not available, as I mentioned, the Wa'ad and Salam contract can support. If there is the myth that there is poor liquidity on the equity market, really, for the Dow Jones Islamic world, it's about 12 to 13 trillion. For the Sukuk, it's 30 billion US dollars. And for 2012, we're anticipating a 24 billion Sukuk in the pipeline. There has also been concern that the standardization is not there and it's quite difficult for Sharia scholars in Saudi who think that the Sharia scholars who have the oversight on Malaysian products are a lot more liberal. That is not an issue really because it's moving positively towards harmonization with all these governing bodies, and from a marketing standpoint, really, it would be better to customize products according to the respective Sharia scholars. So what influences the growth of Islamic capital market products? I just want to highlight 3 reasons. Firstly, the Sukuk issuance, from an investor standpoint, it grants comparable risk return. But from an issuer standpoint, those that issue the Sukuk, like the corporate in Austria, for example, it covers a broader investor base. It's like the same story of having a halal hamburger in McDonald's. If the McDonald's downtown in Vienna provides a halal hamburger, it would be able to cover a broader customer base. Currently, the McDonald's is actually non-halal, so it is not able to cover the Muslim. It only offers to the non-Muslim. So if you issue a Sukuk, you get a broader investor base. And secondly, from an Islamic investing standpoint, what influences the growth? It's because it's resilient in a downtrending market. It has been tested amongst the conundrum and the black swans of the last 6 years. So it is proven to grant comparable risk return in the long term, and yet you're actually investing in a social, for a social cost in an ethical manner. And thirdly, what influences the growth of Islamic capital market? It's the competition that the financial centers is using, because they're using Islamic finance as a niche to compete with each other. When I was based in London, I could see New York was also very interested in Islamic finance. So London is using Islamic finance to compete with New York. Luxembourg is using Islamic finance to compete with Dublin. Singapore is using Islamic finance to compete with Hong Kong. And Bahrain is using Islamic finance to compete with Dubai, or Dubai is using Islamic finance to compete with Bahrain. Where is Malaysia in this whole thing? Malaysia is not competing with everybody. Malaysia think we should all build a bigger cake, and we should be able to share a bigger piece of a bigger cake. So it's our responsibility in Malaysia to go around the world and educate investors who are totally in the dark about Islamic finance, to mitigate all the misconceptions and to mitigate the maze. So Malaysia has been successful in being seen on the world map. If I'm standing here, probably 8 years ago, I would imagine you all don't know where Malaysia is. But you're able to know where Malaysia is, thank God, because of Dr. Elizabeth. She is the operator for also the medical school and and hospital in Malaysia. But Malaysia wants to be and has successfully shown to be the global hub or global financial center for Islamic finance. I welcome you to Malaysia. There has been a misconception as well that the proxy for Islamic finance that has got complete regulatory and legal framework is Dubai and Abu Dhabi and the whole GCC. But actually, Malaysia is a little bit more ahead in having a complete legal and regulatory framework, not for Malaysia, but for the whole world to utilize it. Just quickly taking you to the next slide to share with you the industry data. The existence of Islamic funds are led by Malaysia, 184 funds, and Saudi, 174 funds. You combine Malaysia and Saudi, both are covering approximately 50% of the total number of funds in the world. And you would be able to see Dublin and Luxembourg as well. So in Europe, you can see Ireland and Luxembourg is very active. Both are nurturing the existence of Islamic funds, with Ireland 24 funds and Luxembourg 35 Islamic funds. Now, where is the global Islamic funds? Islamic funds are really catching up. There are 800 Islamic funds totaling 52 billion US dollars across all the assets classes. And if you look and compare with the 60,000 conventional fund, indeed, it has a growth trajectory. The Islamic funds is about just above 1% if compared to the 60,000 conventional. So it does reflect the potential on the growth of the Islamic funds. There are also global catch-up. If you look at this visual, in these countries, with the introduction of Islamic governance as an inclusionary appeal to facilitate the players who wants to provide a choice to its investors. So you can see UK, France, and South Korea, and even Kazakhstan in this visual. And in this next visual is a carry-through. There's also robust evolution, and this robust evolution are in non-Muslim countries. I add Canada, Germany, USA, Austria, Japan, and India. Now, why is there a case for Islamic asset management, and why is there a case in Islamic investing? Here it is in the next visual. What is there for you? Do you know that Islamic equity indices tend to outperform conventional indices over the long-term period? So you can see in this slide whether it is Dow Jones World or Dow Jones Asia Pacific ex-Japan, or whether it's European portfolio or even United States or US portfolio, for the last 5 years, it has shown that it has outperformed the conventional indices. Therefore, Islamic asset management grants a comparable risk return, really, if not better in the long term if compared with the conventional. In summary, this next visual will share with you, besides the empirical evidence I just showed just now, that You still ask me, why invest in Islamic? Why invest in Sharia? Why do I care? Really, in summary, it is a process that exercises prudence. It provides a choice to the minority. It has got a socially responsible SRI angle. It's actually value-based. The assets in the portfolio are lowly leveraged assets. It can complement or it can diversify to the ethical investors. It's ethical investing. And in this next slide, it's actually a movement from capitalism, from free market to the fair market. The structure mitigates the greed behavior because it practices fair distribution of wealth that inhibits ultra-profiteering and greed. So it goes back to basic, and fundamentally is based on tangible and asset-based transactions. It's ethical investing, and in conclusion, it's investing in lowly leveraged funds with low downside risk in a downtrending market, and yet you're able to invest in a social cause. For some people, it's a faith. So, ladies and gentlemen, the current financial crisis is attributed by several factors, including the failure of regulators and market discipline, flaws in corporate governance, irresponsible corporate behavior, and the breakdown of the traditional risk management. Unmonitored credit expansion and abundant liquidity supported by cheap money policy and low interest rate led to speculative booms and asset price bubbles. In the current financial asset crisis, is there lessons learned? Can such crises occur under an Islamic financial system? What are the implications to Islamic finance? First, there is less direct impact of the crisis on Islamic finance who are not caught by toxic assets, as Sharia laws prohibits interest and usury. So lack of structured products, reluctance to exploit sophisticated derivative instruments leave Islamic banks positive. So what used to be a handicap is now considered the height of wisdom. However, secondly, Islamic finance is still impacted in equity valuations and the plunge in real estate across GCC. So considering that lending under Islamic is based on the concept of asset backing, according to Standard & Poor's, it suffered a decrease in the value of sukuk issued in 2008 to $14.9 billion US dollars, down from $30.8 billion US dollars in 2007. The infancy stage saved Islamic finance from a subprime-like mess so far. The current financial crisis would not have occurred under the Islamic financial system because it is based on the idea of assets-based, entrepreneurship, profit and loss sharing, and transparency. So theoretically, it would be impossible for a crisis such as the subprime mortgages to take place in an Islamic capital market sector, as it was a systemic trade-off between risk and return. Islamic or Sharia compliance prohibits bad risk and encourages good risk. Let us just proceed to agenda number 3. Agenda 3 mentioned why invest in Sharia, and please share empirical evidence with research from a portfolio manager standpoint. Now, Islamic finance has a long history of silent presence in Europe. Major early development in Geneva. In 1981, there was Dar al-Ma'al al-Islami Trust, an investment company that holds stakes in several Islamic banks. There were also many high net worth deals with the UBS Bank of Switzerland, the leading provider of Islamic wealth management. The pioneering sukuk in Europe was set up by the German federal state of Saxony-Anhalt. That was the first and only Euro sukuk in the world. It raised Euro 100 million through an issuance of 5-year sukuk in July 2004. And although London has been active in the rest of Europe, the idea of Islamic finance has yet to attract attention on a large scale. For example, in France, where Muslim population of 6 million is 3 times that of the UK, the authorities and the regulators has been slow to realize the potential of this market. However, my colleague in Amundi, BNP Paribas and Soc Gen, for example, they are French banks. They offer Islamic finance, Islamic asset management. They're very brilliant and very smart. They base their headquarters in Kuala Lumpur. And if you go anywhere around the world, if you even trade the sukuk at 4 in Dubai and London, these are the people that are leading in Islamic finance. They're actually the French-based, French-owned bank, but based outside of France. They were able to actually arbitrage and provide such. I mentioned in Agenda 3 that I would want to share with you the empirical evidence on why Islamic investing is a lot more resilient than conventional. As an asset manager, the toughest time to manage a portfolio is during a downtrending market and also during volatile times. So in the last 5 years, there has been so many black swans and conundrums. There's the inflationary fears, the US mortgage crisis, increasing oil prices, global financial crisis, the Dubai credit crisis, sovereign debt crisis in the Eurozone, the Middle East, North African unrest, the Japan earthquake, and still the EU crisis persist in 2011. And during these conundrums, let me just share with you this extract. This is showing the resilience through Europe. Why? Because, like I mentioned earlier, the Islamic screening on equity investing uses financial ratios that is part of its quantitative screening process. There are 3 debt ratios. There are 3 financial ratios: debt over market cap, receivables over market cap, and cash over market cap. As an outcome of that, there is high quality assets with strong fundamentals. The stocks has got low debt to equity ratios. And the stocks in the portfolio, in this European case, the stocks with stronger balance sheet and limited direct exposure to financial crisis remain in the portfolio. So you can see the MSCI Islamic World Index, the red color, outperforming the conventional since 2007 until November 11. You can see here in the next slide that still the equities outperform the conventional in both the bull and bear market. This is actually a global capability. You invest in global stocks. So with a positive outperformance, the cumulative total return of a difference of 16.4% in the global equity. Just to further make sure that we are all on the same page, from an Islamic global benchmark standpoint, Austria is a small market and a quite modest component of both Sharia indices, MSCI and Dow Jones Islamic market. Austria is representing less than 0.1% of the weightage. The MSCI Global has one company, which is OMVAG, as a Sharia compliant stock, while the Dow Jones Islamic market includes 4 companies in the global, and they are May Malinhof Carton, it's a carton company. Malinhof Carton. And the second one is Österreichische Post AG, it's a post. And the third is Scholar Blackman Oilfield and Equipment. I shall not try then. So the Sharia compliance stocks are the one in energy, telecommunications, healthcare, consumer durables, computer. If you think they are limited stocks, you are actually in the misconception again. Now, if I share with you this large cap, it is still outperforming under total return by 16.03%. And quickly, on the next visual, this next visual, how does it look if you invest your money in a European Sharia? So as you journey into a European Sharia through the bull and bear ride, you can see the green Dow Jones Islamic market outperform the conventional by 17.39%. For the 5 years of investing in a European portfolio, you would be getting a 5.02% accumulated total return. 5.02%. In the next slide, this is the performance of an Asia-Pacific. We exclude Japan. The Islamic grants a positive 8.3% in excess of the conventional. Comparing investing in an Asia-Pacific ex-Japan and Europe, it's worth noting that investing in an Islamic Asia-Pac ex-Japan gives you a total return of 30.95%. If you go back to Europe, for that 5 years, the total return is 5.02%. So you might want to consider investing outside Europe and take advantage of the growth economic story in the Asia-Pacific region. And I have also put in United States, a quick one. You can see the outperformance there as well. And interestingly, sharing with you Japan here, this is a very interesting finding. The outperformance of Islamic portfolio to conventional is really commendable. The outperformance is 35.52% for that 5 years in 2005 until December 2011. It is in fact diverging wider, and that is during the tsunami. The Islamic performed so much more outperformance than the conventional in Japan. And this is a quick summary of outperformance or snapshots during the disastrous event of the tsunami in March 2011. You can see whether it's global, Europe, Asia Pacific, or Japan, the Sharia portfolio is based on fundamental strength of the companies. And when they respond, they are resilient than conventional, even with a situation like the tsunami in Japan. Ladies and gentlemen, the world acknowledged that Europe is the most advanced and most sensitive region to investing in ethical portfolios under the SRI as well as ESG capabilities. So I have actually here share a research with you on responsible investment. If you look at the chart here, and allow me to share this 5 years visual of comparative tracking of 4 indexes. It's conventional world index, the red is the world Islamic, the green is world ESG, and the blue is world SRI. Interestingly, you would be able to see all the 3 ethical investing outperform the conventional indices. But most interesting, the world Islamic indices, which is the red color. Can you see the red color? The red color there, it has been showing an outperformance even to the ethical investment of SRI and ESG. So, ladies and gentlemen, before I conclude, probably 2 minutes introduction on my company, Just a 2 minutes introduction on my company. CIMB Principal Islamic Asset Management is 50% owned by Principal Global Investors of the United States and 50% owned by a Malaysian investment bank, who is the second largest in Southeast Asia, called CIMB. We offer institutional clients global capabilities in 2 asset classes. They can invest in global sukuk or they can invest in global equities. If we can manage global sukuk Islamic and global equity Islamic, we can manage any region in the world. Currently, we have asset under management of $765 million US, which has been accumulated for the last 3 years. But as a group, we have an Islamic asset under management of $3 billion US. And just a quick sharing of what we have to offer. We are launching next week on February 6th, 3 equity Islamic UCITS 4 funds. It's domiciled in Dublin, and we are focusing on market which is growth economic story. So we are offering to investors in Europe, Islamic Global Emerging Market, 1 capabilities, Islamic Asia Pacific ex-Japan, another capabilities, and Islamic ASEAN, which is the Southeast Asian equity. This has been the request of investors to have an Islamic growth story equity UCITS 4 for them to invest. Ladies and gentlemen, allow me to also share with you, we have international recognition by being the best Islamic asset management company from various publication, as well as very pronounced award contributors. And with that, allow me to conclude by stating that the economic development and growth, along with social justice, are the essential elements of an Islamic economic system. Islam is based on essential doctrines addressing the value of natural resources, set standards for the exploitation of minerals, stipulate guidelines on inheritance, finance, taxation, and banking. It emphasizes the importance of education, healthcare, hard work, investment, a social safety net, and especially social and economic justice. So while the net effect of financial globalization may be debated, the fact that it has a significant effect on risk sharing, financial stability, economic growth, incomes, cross-country income differentials, within-country income inequality, poverty elevation, and more cannot be denied. So as economic performance improves in the OIC countries, as financial liberalization continues, as financial regulatory supervisory administration of Islamic financial practices matures, as Muslims are afforded drivers and better opportunities to save and invest in accordance with their religion, and as the inherent stability of an Islamic financial system becomes acknowledged and accepted, the growth of Islamic finance should be more rapid than anything we have seen in the past. However, the questions remained. Will the world at large reduce its reliance on debt financing and leveraging and move more towards equity-based financing? We are aware that this scaffolding in the Islamic investment banking sphere in its entirety is not yet fully in place globally. But an important takeaway from this presentation that I'm sharing with you is for you all to just remember that an Islamic structure can mitigate the greed. Why? Because it practices fair distribution of wealth. It inhibits profiteering and greed. How? Because fundamentally, it is based on tangible asset and is asset-based. And you would agree with me, this makes good investment sense. Finally, the question on where do you see Islamic asset management 5 years from now? And I would say it's relevant, it's necessary, and it's powerful. It's relevant as a financial inclusion to grant a choice to the minority. It's necessary because in the long term it will coexist along conventional. And it's powerful because it prohibits excessive risk activities. Ladies and gentlemen, Duncan Chond, ad pavom pervo magnos akovo agit. I'm happy to be here and thank you very much.